Alrighty, good evening. Thank you so much to everyone tuning in for this week's edition of the Virtual Office Hours. We have a very exciting discussion today, diving into the terms and conditions of insurance policies in addition to risk solutions. So, we have two very important and insightful guests with us today, Latif Wekesa and Joseph Gitau. We're going to give everyone a minute to join the room and then we will get started. Thank you. Good evening again, and thank you so much for tuning in to this week's edition of Virtual Office Hours. We are currently live on the Kenyan Wall Street's LinkedIn, YouTube, and X accounts, in addition to the webinar streaming platform. We are really excited for today's discussion titled The Missing Details in Insurance Terms and Conditions and the Role of Risk Advisory. So today we have Mr. Latif Wekesa and Mr. Joseph Gitau from Minet to tell us more about what that means, to help us break down understanding the terms and conditions of various insurance policies, what you can do to avoid risk both within your business and your SME, and then, talking about practical steps that you can do to protect your business. Now, to kick us off today, I'd like to go to Mr. Latif Wekesa. Mr. Latif, please tell us a little bit more about what you do with Minet and what Minet is. You're on mute, sir.
Thank you, Andrew, and it's a pleasure to be part of this important conversation. Being in a world that is dynamic, that risk keeps on changing its own form positions, such that you not have certainty about tomorrow. So it's quite exciting for us just to educate the public. My name is Latif Wekesa. I work at Minet as the general manager in charge of business development. And my role is actually central to the part of the discussion today. It runs from business acquisition, relationship management, and more importantly, just to ensure that the commitment of service that we give to our client is actually come into fruition when a claim or any need of risk advisory arises. At Minet, we enjoy 77 years of providing risk advisory, having started in 1949 in Kenya at J.H. Benson. Then most of the people will know us as Aon Kenya. This was following acquisition where we were acquired by Aon Corporation. Then in 2017, we did transition to Minet, and we operate in 9 countries across Africa. So this just gives us a leverage in terms of managing multinational program, Pan-Africa program, and just overall support for the clients that are sit across Africa. We are also lucky to have our big brother Aon, which of course give us that global footprint. So one of our key advantage that we have in market is leveraging on a global expertise and at the same time combining the local insight just to bring a world-class risk advisory to our client. So in nutshell, that's about Minet. And thank you, Andrew.
Thank you so much. Mr. Joseph Gitau, can you please tell us what your role is at Minet?
Thank you, Andrew, and it's a pleasure to be in this important conversation. So my name is Joseph Gitau. I work at Minet. I'm an associate general manager in a department called Minet MLIS. I'll call it in full Minet Risk Solutions. So the department basically deals with uh, customer retention, and that is the business that I oversee. And basically what we do is to make sure that any customer we have is serviced properly. We also make sure that any insurance that we have recommended, they're able to optimize. But importantly, we also ensure that in case they have, say, for example, a claim, we ensure that those claims are serviced properly. So I would say, therefore, what I'm in charge or what I oversee is basically customer retention, but with a bias to customer service.
Okay, perfect. Thank you guys for that, and it's a pleasure to have you both on today's discussion in the Virtual Office Hours series. Now, I want to start us off with the most important question that a lot of people have, and this is a question I have as well. And, you know, as someone who has acquired insurance policies and has done things, oftentimes there is a huge misconception and misunderstanding of, you know, the terms and conditions, what's covered in a policy and such. So this question goes to both of you. Whoever wants to, you know, take it is welcome to. But why are insurance policies often misunderstood?
Thank you, Andrew. I think I'll make an attempt and go first. And I'll just want to start by a story that a story is told. Three gentlemen went to heaven, and of course, we hope that we'll get there. So when they got to the gate of heaven, so the first one was asking, "Hey, who are you?" So I'll use your name. "Hey, I'm Andrew. What were you doing in the world?" "I was the CEO of Kenya Wall Street, and I was helping people understand information and just understand what is happening and giving them real time and information." Say, "Oh, very well, thank you. Get in." The second gentleman walked in. "Who are you?" "Oh, I'm Joseph. What did you do in the world?" "I've been a doctor treating patients." "Oh, wonderful. That's a good job." Then the third person came in. "Who are you?" "Latif is my name." "What do you do in the world?" "I do. I was doing insurance and I was selling policy to people." "Oh, so I was told, oh, get in, but subject to terms and condition. You can only stay here for 3 days and go back." So, so even in heaven, insurance is still misunderstood because of what we call the fine print. But what in a nutshell, what I want to say is insurance is majorly made of many legalese and technical terms that sometimes, if you do not have a competent expertise that can be able to break down the language uh, of the policy to relate to the realities in terms of your business, then in most cases you'll just be buying a paper. So having your own decision to buy insurance without seeking an interpretation, then that's what we have seen as a major challenge to most of the clients, because you'll find terms like excess. So when you hear excess from a layman, you'll actually think it's overflowing, and maybe you think that you have a policy that has a broader coverage, yet in the real term, excess means a portion of the risk that is not actually payable by insurance that you actually foot. So what you are seeing is just purely misalignment in terms of the reality on ground and the legalese technical language that insurance tends to use. And in most cases now you find people, other than buying the actual insurance, they actually focus on price. Just give me this policy. Can it take care of this? Yes. How much? Period. But they don't go into the insight and just understand the do's and the don'ts. But it is our responsibilities now for such forum as risk advisor. How do we break down and help the client to make a correct decision in terms of the correct purchase and the correct product or policy to purchase?
Maybe just to add on what Latif have said, it's also good to point out the nature of an insurance contract that we have. And we have two major categories of insurance term and condition. One is what we call policy warranties. And when you look at these policy warranty, they create duty and obligations. And what happens is that if you do not understand these warranty properly, then they make your contract avoidable ab initio. The other type of contract is basically the general conditions, which again define duty and obligation of a contract, and they define what each party to the contract is supposed to do. Now, one of the problem with the insurance contract, and is basically when it comes to now the term and condition, in most cases you'll find they have a lot of legal jargons or financial jargon, and sometimes some of these jargon, they are not commonly understood, because if you're not an insurance practitioner, sometimes they might not mean anything to you, because you may find some of these words we use or jargon, they are words which in most cases they are also applicable in general conversation. And therefore, when you read an insurance contract and you read it and they interpret it literally, sometimes you end up not getting the real meaning of what is expected of you. And so sometimes, therefore, you'll find the customer violating those terms and conditions unknowingly, or sometimes we say innocently, simply because they misunderstood the contract. The other problem with the insurance contract sometimes, and this is where people make assumptions, is that I've purchased this contract from an insurance agent or an insurance broker. Therefore, I expect that these people did their due diligence to study the contract, and therefore it reflects my rights, my interest in the best light. But sometimes those are the assumptions. So what happens is that people do not read those contracts or scrutinize them. And so what happened is that in case of a claim, then you realize there are certain conditions that were imposed upon you that you never complied. The other thing is when you look at a policy, a document, which is basically um, a contract between the insured person and the insurance company. These documents are huge. They are voluminous. Sometimes people do not read the policy document word to word. And therefore, sometimes you miss on some of obligations that are created upon you. And therefore, because of the size of the contract, then you find these terms and conditions are not understood because people do not read them keenly.
Okay, so you would say that you would encourage everyone to either get an outside opinion or go with a fine-tooth comb through their insurance policy before they purchase one, correct?
Yeah, that is highly commendable because you see now, first of all, insurance, we have earned ourselves a bad name that we are not true the people and we should not be relied upon. But it's not that we are not reliable. It's not simply because people do not read those policy documents word to word, and therefore they do not understand the conditions that have been imposed upon them. So for you, therefore, to understand the coverage and to understand the do and don't, it is highly, therefore, encouraged that you should read those policy documents word to word.
Okay, and have you seen also that there are individuals who don't know, I guess, or are missing details when they're acquiring a policy? Is there common things that people just assume is covered but is not, and they should recognize that before acquiring a policy?
Yes, that is very common because you see, insurance contracts, they are governed by what we call insurance principle.
Mm-hmm.
And one of the insurance principle is what we call the principle of indemnity. And what the principle of indemnity means is that in case I suffer a misfortune and I have purchased an insurance policy, then that policy is supposed to restore me back to the position I was. But sometimes that is not the reality because you find sometimes the expectation they are met with surprises. Because when it comes now to insurance, they are the policy sometimes they are not very very clear. For example, when it comes to say basis of indemnity, I'll tell you that in case you lose your car, I'll get you a new car. But then I do not go and explain what criteria will I use to arrive at the price of compensating you that new car.
Mm-hmm.
And so this is where the surprises are. For example, we will say we'll pay you a new car, but we do not explain to you that when it comes to now a payment of a claim, I will deduct what we call wear and tear. Or even if we we indicate that wear and tear will not be paid, we sometimes, and not sometimes, always, we do not indicate the formula which is going to be applied. And so sometimes you find that when it comes to now the settlement of this claim, you feel like as a customer, the process is very subjective. And sometimes people feel like there is no sincerity because what you told me is that you last told me to where I was. But then whatever compensation I'm getting, when I look at that payout check, it is not even enough to buy me a new car. Now, which are these conditions that sometimes are not very clear? Sometimes you may find, for example, when it comes to now the basis of settlement, we do not clarify that yes, it's indemnity, but when it comes to this indemnity, we will not be paying you for wear and tear. That yes, we are going to pay you a new car, but we are going to exclude anything that was prior damage. So sometimes these are the information that when you look at the policy, they are not very, very clear. Or sometimes we can indicate that we are going to pay you for the loss, but we'll subject you to what we would call, say, for example, an average clause. Of course, when I buy an insurance as a layman, I do not understand this insurance jargon. So maybe even to you, you might not understand the word that an average clause is, but that is what you will find in that policy. So what normally happens is that when your claim is now being adjusted, that is now the time you realize the true implication of what was this average clause. How comes it is kept my attention? Because sometimes they are very, very punitive. And that is why you find people saying the insurance, it's not something that you can trust or rely upon because of these surpluses. But it's not that they are not there. It's only that they are there. But when you look at the language that has been used, it's so technical, sometimes you do not comprehend the true implication of some of the words that have been used. And the other thing is that, as I said, some of these words, you use them in daily conversation. But when it comes to insurance contract, then you find they have a totally different meaning. So that assumption that there is this terminology that was used, you interpret it according to your own understanding, but then you find the implications are quite dire.
Yeah, I guess the simple way of putting that is, if you have an S class that's 20 years old, and you get into an accident, don't expect to be buying a 2025 S class with insurance money. I think you hit the nail on the head. A lot of people kind of assume they can get rich quick. That is definitely not how this works. This is insurance is very much a risk mitigation and risk management step. Now, I do want to tell the audience, if you have any questions throughout the duration of this webinar, please add them in the comments. Toward the end, we will be addressing many of the questions that come in and such. So please, don't hesitate if you have any questions. We're all here to learn, including myself. Now, Latif, I want to jump over to you real quick because you had mentioned, your work on the risk management side. Now, I'm curious, how does risk advisory help kind of identify, I guess, gaps or potential issues that could arise before you get to a claims process or before you're in a position to where you have to approach the insurance company for a claim?
Thank you, Andrew, and that's quite an important point. I want to use an analogy that even if you want to go and marry, I think ideally you have to do a background check. Who are you marrying to? Which family? What are the characteristics? It's not any different in terms of insurance, and I think that's a critical role that risk advisory brings on the table. And for the audience, I think one of the most important things that people ought to know is you do not incur an additional cost to tap into the services of a broker or an agent or anybody in terms of intermediate, because our remuneration is regulated and we are fully compensated within the framework of the Kenya Insurance Act. So one of the most important thing is why it's important to have an engagement of an expertise before buying a solution, like what my colleague has put into. You are entering into a relationship. So I'll try to be as layman as possible. So you must do what we call a bit of fact finding. So as a broker, or our role as risk advisory, the critical component that we bring on board is what we call risk mapping and risk identification. So you run, for example, in a hospitality space or a hospital, you run a hospital and you want to pick up an insurance. So where do you start, and what policies will be critical or applicable to you? So when you walk into our premise or you reach out to us, our first primary role is we'll want to understand your business operation. Through that, then we can start mapping. So there are various ways under which you can assume a risk. For example, and I'll pick an office or a hospital setup. One, is there regulatory compliance that you need to meet? So any hospital that runs globally, which is a standard practice, and you're providing service, the bigger risk that you need to have from statutory is a professional negligence. So with understanding your area of operation, so we'll first of all categorize, is there statutory, a mandatory risk that you carry by virtue of being that in that business? And remember, being a medical practitioner, your core is actually providing a professional service. So if your hospital is actually shut down following an error in you executing your professional duty, technically you're out of employment and you're out of a livelihood. So that's actually the first step that we do. Understand the operation, then we move into a risk mapping. Within the risk mapping framework, then we'll be able to help you and guide you that this is a quantification of the risk that you can actually transfer. This is what you can retain. And if you are to retain, what risk management measures are you able to actually put in place so that you can be able to comfortably hold the risk? So that is what proactive management in terms of risk comes. So we have moved into more or less of transactional, just to move and buy a policy, like when you walk into a supermarket to the shelf, maybe get a Ketepa tea and move out. No, we move into prescription. Our prescription in terms of the exposure must match in terms of the cost of the transfer. And that's actually what we bring in board, and just make sure that how do we build a strategic partnership so that when you look at an advisory role of a broker, or rather placement broker, will be somebody who has the best interest at heart in terms of your business, able to understand your business, map the risk, quantify, and advise you what is the correct tools of transfer that are actually available, so that you don't have to buy an insurance, then you come to realize that, oh, you actually bought a wrong policy that you did not need when a claim arises.
Yeah, I think, a good point on that is just, to always be asking questions, to always be asking uh, the insurance policy, I guess the person who's working with you to establish that. There's never any stupid questions, I always say. Ask and know as soon as possible. It's like, hey, this one's probably not going to work for me. So why would then you want to spend, 10,000 shillings a month for 3 years on it, just to find out that later down the road, that didn't do what you wanted. I think that's an important piece, and such. So I guess, Latif, Joseph, I guess back to this question of, imagine I'm an early stage entrepreneur. I'm getting ready to start, maybe a shop, a business, and I want to make sure that I'm covered for whatever risks may arise. Now, being in this same example that I have never maybe worked in this industry or done anything extensive in this industry, maybe I don't know what those risks are. You had mentioned you'll help me as the entrepreneur, the director, identify those risks. So what kind of process then should that entrepreneur go through in order that, their risk assessment and risk kind of management covers then everything that is both foreseeable and unforeseeable?
All right, I think that's a very important question, and it takes us to the Minet business model. And so our role, first of all, is we don't assume. We need to discover, we need to look at the nature of business you're operating. And we need to identify what are the potential risk exposure that can affect the smooth running of that business. And the other thing is to analyze those risks, critically looking at the severity, that should this risk strike, what will be the impact to the business? So in this case, what we do now, we develop the what I think Latif said, we do risk profiling and then risk mapping, just to understand the business, first of all, the business processes, what risk can emanate from those risk processes. But importantly, what we do is now develop a tailor-made solution to address those risks specifically. Because sometimes, and this is where people go wrong, is that we tend to give generalized or generic solution, which are not relative to particular issues facing that type of a business. So the risk management is therefore critical because for us, we'll look at the business, we'll identify the potential risk, we'll analyze them, and then we'll recommend an insurance program that is relevant to address those risks. And then what we'll also do is that because insurance policies, they do not cover all type of risk. So we'll also give you a recommendation from risk advisory that there are certain risks that you cannot be able to cover them through insurance. So, and what we will do is therefore to give you some recommendation that if you do ABCD, then it means that you'll be able to minimize or eliminate that type of risk from affecting the business. So I think in terms of a new customer, therefore, what we normally do is to look at you, and we will look at the business, you look at the processes, and then we look at business from A to ABCD model. We look at where you are sourcing, where you are manufacturing, on the whatever the processes you are doing, and then we'll also look at the end results. Who are your consumer, and what are the risks associated in every stage of that variation? And then we will now craft insurance solution that can respond to those exposures.
Okay, interesting. I think that makes a lot of sense, and I think that's really good. And this kind of brings me into my next question, and it's sort of looping back a little bit to what we were talking about terms and conditions, but then also brings in the risk side as well. And I'm curious, what we had said earlier was a lot of people are very reactive when they're looking at risk and the terms and conditions, the T and C. So what is your advice then for someone who wants to be a bit more proactive in those things rather than reactive?
Thank you. So maybe I'll take a go, and I can also allow my colleague. So one is the first advice is to totally own the process. As a client, you need to own the process and understand, because you understand your business better than anybody. So one of the core critical mandate as a client that you don't need to dedicate is actually own the process and ensure that you ask whatever questions that needs to be asked. Then fundamentally, if on assumption that two clients, maybe this a newly established entity that is actually starting, ideally source for brokers who have similar experience of having insured a similar business that you're actually getting to. Why do I say that? Then you get the benefit to ask, who have you insured in this space? What are the challenges have you seen? What are the claims have you not been able to settle, or have been declined by the insurance company? What were the causes? So don't be too quick in terms of rushing to pick the cost. Or for example, you go into the market, and this is what we see with most of the clients. Without tapping into maybe an expertise, then you just roll out an RFQ and say, please submit a quotation. Then it becomes a lowest evaluated bidder winning the prize. Then you forget that price is not the ultimate determination in terms of what value do you get from an insurance policy. So the most ideal environment is before rolling out an RFQ. The first instant is ensure that you commission what we call a risk survey. So the risk survey will do the work about what my colleague Joseph has actually put into place, and just look at your operation, then map it, then come into the transfer in terms of the policy. Focus on the coverage and exclusion. So within the exclusion, are there exclusions that are listed in the policy that are directly affecting your operations? So if they are there, then the broker needs to either advise you in terms of, are these exclusions that can actually be bought back within the policy, or is it something that there's an alternative that I can be able to maybe work around and ensure that there's a comprehensive. So my key advice, what I'll tell the client, is actually own the process. Don't make insurance only to be a discussion about cost. So the first most important thing, actually focus. The question that we usually love clients to ask is, come forward and just ask, what is it that I'm not covered for and why? What is it that you are selling in this policy does not take care of my interest? So look at those exclusions. Then from the risk register, based on your operation, then you can have a tick box and say, this is excluded. When I go into my operation is a high risk, then is there actually an alternative? Then with that, you can be able to have much more grip. Then more importantly is, risk is evolving. There's what used to happen 20 years ago. So also keep asking your advisor or the broker, what is this risk that are actually emerging today? For example, the issue of COVID. Nobody knew that COVID will actually come into place. And they have actually seen a lot of litigation claims under business interruption, where hospitals were actually shut down. They could not operate, loss of business went into COVID. A lot of jobs were actually lost. Recently, back here home, we never foresee where we could have a Gen Z protest. And one of the questions is whether the protest which could be going on could be classified as a political risk. Traditionally, the policy that has actually been in the market has always been politically instigated. Any activity that comes from a political instigate, if it has a political motive. Now you have a generation which are saying they are partyless, they are tribeless, all they want is good governance. Then what is the position of actual risk management in terms of what is actually evolving today? A lot of issues are happening within the management space, where we see CEOs, finance officers losing their job because of a single decision that they made in the course of executing their duty. So what is more important is, can you look at the current environment, the future, and what is it that is emerging, to determine actually your correct choice when you sit down and just to understand the terms and conditions, and ultimately make that call, which is the policy that will actually be fit for purpose for you to procure as a risk transfer tool.
I have a quick follow-up question to that. And I'm curious, from Minet's standpoint, how customizable can a business get with its policy?
On a scale of 1 to 10, I can say 10.
Okay.
We have the ability to customize, and this is one of the things that uniquely places us as a leading insurance provider. One, and why I say that is, number one, we have an in-house reinsurance broker who is able to actually go direct and negotiate with reinsurers, look at the risk specifically, and package the risk in a way that reinsurer can be able to actually understand better. And that's why I was saying that sometimes why insurance is misunderstood sometimes is about the language. The language of business is not communicating to the language of insurance. So how our role is actually to bridge that gap. The number two, we have a robust risk management a team that actually performs risk survey, conducts risk assessment, quantification, and risk profiling. So through that, you can be able to actually classify a risk in a correct category and be able to actually customize to be able to reflect. Then, of course, what we are not leave by saying is we control about 11% of the total premium that is written in this market. So with that, we have the muscle and the appeal to actually sit down with the underwriters and reinsurers and be able just to customize. Then, of course, I mentioned about our global footprint from the Aeon. So whatever is not available in Africa, we'll have actually to source it directly from London just to make sure that we customize. And you'll allow me to say, just like what AIG was saying, that the earth is covered by land, water, and AIG. So that is the principle that we actually also borrow in terms of customization and providing solution to our client.
Okay.
Maybe also to add, customization of insurance policies, that is our DNA. Because when you look at our business model, it's actually clearly designed to customize solution. Because at Minet, we have a business model that we use. And as I mentioned, the pillar of that business model is first of all to discover the issues that can affect your business. So meaning we are referring to you as a person and the specific issue that can affect that business. And then the other thing is to develop a solution that we feel can address those exposures or those issues. But then we also deliver. But how we deliver is that we do not just deliver. We'll, of course, train you to understand the product. And we'll try to align those products with the issue, which will have already been discovered or identified by our risk department. But importantly, we do not just rest there. As Latif said, risks they are dynamic, they keep on evolving. So the other pillar of our model is to continuously review. And that is why you will find Minet. We have that full-fledged risk management department that on an annual basis, it will visit your premises and review just to try and find out whether the business has evolved, whether there are any changes that are required, which are material, that require to be notified. And we also try and test the resilience of those policies to see whether they can they are capable of addressing the emerging risks. So I think when you look at our business model, it's very specific and it's very deliberate to customizing solutions that are relevant to a particular customer. So we do not go for off-shelf products. We tailor make those solutions just to make sure that, first of all, we have understood you and whatever recommendation we are making, because our solutions are in two categories. There is what we can recommend so that you can take an insurance, you can buy an insurance product. But there are those which you cannot insure, so we recommend risk treatment measures, which you can again use to improve the situation. So I would say, therefore, our DNA is basically to try and customize our solution so that then we do not sell off-shelf products.
Okay. Yeah, no, this is really important for me because, take for example where I'm from. I'm from Virginia Beach, Virginia. We have a lot of hurricanes. In fact, right now is hurricane season. You know, so for my family back home, we would want to be covered for hurricanes. But there's no need for someone in Nairobi to be covered for hurricanes because there are no hurricanes in Nairobi. The same thing, take like if you're out in Oklahoma in the United States, you need tornado insurance. Do you really need tornado insurance elsewhere? So I think that customizability allows, you know, things to also not only geographically, but also just business model wise and such be able to be much more specific. Now, I do have a question, uh, Joseph. One of the biggest criticisms and challenges people have in the insurance industry is when it comes to filing claims. I'm curious, what are some of the challenges that people have risen to you in regards to filing claims, and I'd be curious kind of how that process looks with Minet, because I know I've heard it from several people that sometimes this can take a long time, and by then the delay in that can cause other issues. So I'm curious if you could shed some light on that for us.
Yeah, that is a very important because it's a daily occurrence, and sometimes the claim process can make you shed tears. But the claim process are supposed to be straightforward and seamless. But normally what happens is that, first of all, because the customer did not read the policy document, sometimes they do not understand the term and condition that are imposed upon them in the case of a claim. And so what will happen is that today I am involved in a car accident. So I'll sleep on that matter. I will not report it immediately. And maybe I want to report it 1 month later. So then again, you find the insurance company are asking you, you have violated the insurance condition because you are reporting this claim late.
Mm-hmm.
The other thing is because you are reporting that claim late, then you find when it comes to now reporting filing of claim, it is the role of the customer to justify their claim and to document their claim. So one of the biggest challenge we have seen is sometimes customers do not maintain their records. So they do not keep their record. And what happens with the claim is that it is for you to substantiate your loss. Because the insurance company, they do not know what you suffered. It is for you now, it is your obligation to document that claim. So where I found claim delaying for so long is instances whereby you find maybe the customer didn't have the correct document, or maybe they have misplaced those documents, or sometimes they did not even go for those documents. For example, when I look at, say, for example, Kenya, if you happen to suffer a motor claim, you are required to obtain a police abstract. And the insurance company will not admit a claim unless you provide a police abstract. Now, if you delay to report that incident, say, for example, an accident to police station within 24 hours, what it means is that the police will not issue with an abstract. An abstract is basically a statement of fact stating that this accident happened, it was involving this vehicle, and if it was on that part of the vehicle, it also captured the details. So if you do not report that incident within the prescribed timeline, then it means you'll never get that document. So when you try to lodge that claim with the insurance company, then you find that the insurance company will become troublesome because they will not admit that claim. So the other thing is sometimes, and I have seen it, for example, when it comes to medical claim, where you find someone take too long to report, and maybe by the time you're reporting a claim, then you find even that condition has healed. Now, you need to provide that evidence. Yes, indeed, I was sick. These are the medication I used. And this is what was diagnosed. So what normally happens is that, and that's why the claim become problematic. If you do not have that evidence to justify, yes, indeed, this is the loss I suffered, and I'm able to prove it through documentation, then you'll find the insurance company will never accept, and the claim process will always be tearless. Sorry, it will be painful. So I think, and maybe, and this is how we as a Minet we normally do. We insist anytime you involved in a claim, we insist that just report to us. And the moment you report to us, then we'll take over the process and we'll be able to guide you with what documentation are required. And what will happen is that we are able to advise you on those documentation so that you are able to acquire them at the right time. Otherwise, when a lot of time passes, then you find even getting that evidence, it becomes almost impossible. And so I think generally the claims are affected sometimes because of the failure from the customer side, where they do not provide the necessary documentation on time.
Maybe
Then
Andrew,
they are. Mhm.
Just to add what my colleague, I think the common challenges that ordinarily which will arise, rather than of course the unethical maybe practice or unprofessional practice that they may face from insurance. What I'll say sometimes is just the lack of knowledge and actually the process. So, and that's why, of course, a risk advisor comes in just to show how do you make it seamless? Because you'll find that you'll have a client who has had maybe insurance for 10 years, no single claim. He has never claimed, so you are never taken through that. So ordinarily, you will not even know where to start. So the common challenge that we actually see is, I think number one is just the process knowledge. And the process knowledge sometimes is actually goes deeper in terms of how did you buy the insurance? Did you buy correct? Did you buy directly from the insurance company? Did you use an intermediary? Then, of course, number two will boil down into the mandate of actually the service provider you are using. So if you bought an insurance cover through the broker, then ordinarily as a corporate or even an individual, then you need to have a session in terms of where you can be taken through how seamless a claim process can be done. So if it's a retail client, what we do at Minet, we give you a booklet that will have stipulated information in terms of your account manager or a general email that you actually need to file a claim and how quickly you can be able to get a response. So the biggest challenge sometimes is actually an aspect of knowledge, which has actually affected, like what my colleague has put. So you might think that not reporting to police is just a minor issue, but yet it's actually the core. Is one of the conditions that we say they are precedent to actual liability must be met. So a lack of knowledge, not knowing the process, and maybe the buying pattern of how you bought the insurance sometimes informs some of the challenges in terms of filing the claims that clients will face.
Okay, yeah, I think that's an important point. Keep your paperwork, don't throw it away. Don't hesitate to ask, and to do things quickly. And I think that's also important, because what you were talking about on the police report side, most people won't know that until they run into that issue. But when you first get your policy, maybe it would be good to sit down and make sure you understand it. You understand how to file a claim, even if you think you won't ever need it, just to understand how that process looks. Because I know when I was in university, I had a car, and someone had wrecked into me. They crashed into the back of my car. They were okay. I was okay. That was the really important thing. But then I know I had done that same thing. I was like, well, the car's okay. I can wait a week, But a week later, an issue arose that was caused from that, and then it became a challenge getting things because I had no police report, stuff like that. So I completely understand from my own personal experience just how important that is, and having the paperwork is critical. So I appreciate that. Now, I'm curious, do you have any like real life examples that we can dive into of where, say advisory and, proper policy structuring has actually directly improved a business or an executive's life?
Yes, we have a number, but I think I'll mention what is so much reason that maybe people will want to relate. I think if you look at the numbers of both Kenya Insurance Regulatory Authority and Association of Kenya Insurance, I think the worst hit in terms of climate change, I think the floods that we did experience last year, hit to a tune of over 6 billion in terms of worth claim that were actually faced in terms of flooding, and one of two major scenario. And we have a client that we decided just to to review their business interruption policy and see was it adequate, even prior to not knowing whether any claim will actually arise. Then boom, come April, March floods. People who live in along Mombasa Road will actually attest to this. A whole mall swamped with water, residential area gone. Remember, one of these clients was actually in real estate, and some of the houses had not actually been sold like 100%. Others were on mortgages, others were on rent. So when we looked into the domestic package, one of the things that we were looking is what is the worst scenario that could happen, and you seek an alternative accommodation where you cannot access your house, and it's an expense that you are not actually budgeted for it. So we did a negotiation just by good luck, and the extension was actually done. So when the flood came hitting, we were actually able to relocate some of the tenants to alternative premises where they could actually get shelter, and the costs were actually reimbursed. A more interesting also discussion, and that's why we say that how do you sit with the client and just understand. A client running an automotive business, and through automotive business, you know how the supply chain works. So you have a logistic partner who maybe ships a vehicle, lands it to Mombasa. It's still within their mandate, or rather obligation, to make it secure, to drive it to Nairobi. Then what happens? So this vehicle is not registered. Then they decide to use what we call KG plate. Right now it's KD, Kenya Dealers. So in most cases, a Kenya dealer plate will have either a motor comprehensive policy, or it will have a third-party policy. But because of maybe operational expense, they take up a third-party policy on a KG plate, and boom, a vehicle gets into an accident. It's a write-off, 17 million.
Mm-hmm.
You want to file a claim on, you realize that they could not actually recover from the third party. But during the interaction, in terms of just reviewing and assessing the risk, and one of the argument which you are saying, how have you defined your stock as a business? And it came out that even the roads, the vehicles which were mechanically propelled on the road, they were actually stock. And we decided just to expand the definition of stock to include the mechanical propelled. And that's when a claim was paid, and even the underwriter themselves could not believe that such issues could arise. So we have quite a number of examples that sitting down and just structuring. And when even it comes to emerging space, people who are reading the news and seeing on newspapers where CEOs are losing jobs because of merely not making a correct decision, maybe to buy an insurance policy, not knowing that we have superior policy that takes care of decisions that you make as a person. I think right now, issues of employment malpractice are actually on the high rise. So you make any decision, you dismiss somebody unfairly, you actually find them in court, and in worst case scenario, you as a person, there's a personal liability that can actually attach following your decision. Here at Minet, we have solutions that could actually address such challenges. So what we have come to learn, and how we are better in terms of our craft, is sit with the client. They know their business better.
Mm-hmm.
But it's also our obligation to know their business much more, so that we can be able to craft a solution that can be able to respond. So that is what we call the part of the proactiveness, just to ensure that you look at the loopholes, how the business ran, and have those what if this happened, what if this happened. And maybe the last one which I could give was I should be in 20, I think should be in 2017, 2016. I think there was a huge fire around Sarit Center, and there were quite a number of shops which were insuring, and one of them were actually in business of clothing. It wasn't banned, but the smoke, in fact, the smoke which was actually within the building, automatically could not allow those clothes to be sold. And guess what? We are taken into consideration that what if this could happen, and it was actually paid as a total loss. So you can actually see, you can't walk into a designer shop and buy a suit that is smelling of smoke. So sometimes the small things matter. Don't assume. Sit down to a client, have those what if scenario, learn from what has happened previously, and see just how do you implement and improve the policy. So thanks.
Okay, cool. Now, for everyone who's tuning in, thank you for joining us. We're across LinkedIn, YouTube, X, and the streaming platform. If you have any questions, please share them in the chat. We're going to start the Q&A here in a moment. We'd love to hear from you and can address some of your questions, concerns, ideas. You know, this is the type of forum to get answers immediately on that. But now, back to our conversation. I think, you know, when we addressed some of the general advice in regards to our discussion around terms and conditions and risk advisory very early. Now, we have well over 100 additional people who have joined the webinar since we went through that. So I'm curious, you know, can we point to 3 or 4 quick kind of advice pieces for people joining us on how they should be reviewing policy terms to avoid any surprises? Yeah.
Okay. I think I will say like the Israel is what they say, that trust but verify. So, and I think one of the biggest mistakes that the customer have been making is to assume that your broker has led that policy and understood it, and also to assume that your broker understand your business operation and the risk exposure that can face that operation.
Mm-hmm.
So, and what we normally encourage our customer, in as much as we may do that list survey to try and understand the internal processes and what can go wrong, we also encourage the customer that it is important that you understand, you read and understand that policy document. And in case you have any doubts or there's something that you do not understand properly, you are always advised to reach out to your broker, because the moment you make those assumptions, those are the now become the pinpoints which will haunt you during the claim process.
Mm-hmm.
And as we said, when you look at now the insurance term and the condition, they are full of legal jargon and financial jargon. When you try to understand, for example, how we look at the business interruption in insurance sector, you may probably realize that it's slightly different from how you are looking at it from the accounting, because there are other variables we consider which probably will not find them in accounting. So it's therefore important when you get that policy document, read it word to word, ask whatever question where you are not satisfied, but please don't make any assumption, because what it means is that then you will not comply with your duty and obligations.
Okay. Interesting. Now, you know, one of the last questions I have is, you know, in regards to levels of risk advisory. Latif, can you break down, are there different levels of advisory? Imagine, like, you know, partial, full, how does that work? And, you know, if there are different levels of advisory access, how can, say, an SME who can't or doesn't want to have full access, you know, still be able to protect themselves on the risk advisory side?
Thank you, Andrew. Yes, there are level of advisory, and ordinarily you'll have two layers. There's what we call pure risk management, and sometimes what we call enterprise risk management, which look at in terms of the holistic run end to end in terms of the operation, the financial, the BCP preparedness. So that's full to end to end. But for singular discussion, focusing on insurance matters. So you like I first of all mentioned that when you get a competent broker or rather risk advisory as your partner, it does not cost you anything. So there's always reason to to use rather than not to use a broker. So the first level will actually be pre-placement, what we call, you want to buy an insurance policy, you want to transfer. What do I need to consider? What do I need to look for? Who is the correct partner? Even partner identification in terms of risk carrier, because we have so much information about the insurance companies, how they perform, what is their customer centricity, how does their policy look like. So that will actually be a first basic in terms of, can you have even a pre-placement advisory role? Then you have the policy placement, then you have post placement. So those are maybe the quick layers. So if you have an SME that maybe by one way or another, maybe they could not, maybe do not have access. Ideally, if they belong to maybe association, maybe like in Kenya, we have the likes of KNCCI, we have KEPSA. So within KEPSA, you'll actually tap into, there are normally round tables where risk management discussions are actually given a priority in terms of areas of discussion. If you want to understand better, then you can easily walk in or join in such organization just to be able to tap in. But what I'll really encourage is it doesn't cost you anything. If you're here in Kenya and you need these services, you just want to understand better. Part of our role is actually to secure tomorrow. And if you are to secure tomorrow, is advisory in terms of businesses and just securing livelihood is what we do. So it will be very happy for us to give you a pro bono service, just advise you this how better you can be able to structure your policy. We can be able to review for you, and I'm sure you'll be able to actually achieve a value in that aspect.
Okay, interesting. Now I want us to move to public Q&A because we've been talking for about an hour. We've gone through a lot of interesting things in regards to understanding better insurance terms and conditions, in addition to what exactly risk advisory is. Now, from my team, I actually received a WhatsApp message a moment ago asking a question. And this was in regards to comprehending policy. So one of the questions was, when you are understanding a policy, you're trying to get better information about it, is it okay to use AI such as Notebook LM to better comprehend what is included in that policy?
That's very interesting. And I think if you go to LinkedIn, I think it's a public knowledge. I think Deloitte, I think there's something, I think either at the point of submission, I think AI did pop up and they were actually fined to supposed to actually refund. Actually, it's one of the trending topics on actually the LinkedIn. So what I'll say is for emerging, the world that is digital, that is emerging, yes, it could help, but kindly double check. You could get a summary, but please double check for clarity and verifiability. Sometimes you can get a prompt that might not give you the correct answer, and you end up picking. Then, of course, number two, AI does not attach any liability. Remember, it's a pro bono. We as risk advisory, we have a duty to ensure that we do a duty of care, and in case of error and omission in the course of our advisory, then you have a legal obligation to actually hold us liable. So the disadvantage of AI is you will not have a fallback. When you have a risk and advisory as a partner, then you have a legal redress should you have in a situation where you have relied solely on their advice to pick up a certain policy. So one, I'll say yes, it's good for quick check, but always rely on double checking from your risk advisor, or just engage somebody who is professionally competent to be able to advise you.
Okay.
And maybe just to add, AI does not replace that professional due diligence that you can get from a broker. So that you can get an opinion which is not binding. But when it comes now to the advisory we give, that is binding. So for AI, it can be persuasive. It can give an idea, But I think the final analysis, you need to consult your broker.
Okay. Yeah, I mean, it never hurts to ask. You can always call or reach out. I'm sure also there's email addresses as well that your clients are given and say, hey, if you have any questions, you can reach out here. So I think yeah, AI may work if you're smart for small little things, but I would never put everything on that for your true answer. You should always go to the source. Now, we have a question here from Caroline asking where you have advised the client to read their policy, what could be the key features that your clients should understand at the time of onboarding or placement. So I believe the question is largely, in regards to, if you're looking at maybe a long policy document and such, where are the few areas and few things that you must 100% be sure to review?
All right.
Great. So yes, you can go, Joseph.
All right. Maybe I'll start by, first of all, looking at the structure of the policy document. It's normally divided into different sections. There is what we call preamble. There is what we call policy schedule. There is what we call now term and condition. This is where you find the coverage and the exclusion. And then there is what we call the declaration, saying that, yes, you have read and understood. Now, I think what the customer should be concerned about is the preamble, because the preamble will define the coverage. But then there are those factors that will limit that coverage in that policy. And these are what are called the policy exclusion. So the policy will say, I'll cover your house against fire. But it will go ahead now in the exclusion side, now put limitation that will cover this house when this and that happens. So two sections that are most critical, first of all, to understand is the policy preamble and the policy exclusion. Now, preamble, it will also go further. It will also define other term and condition. Say, for example, is there an excess which is applicable or deductible? So I would say there are areas that you cannot avoid. You must make sure that you have understood the exclusion and, importantly, the policy coverage. Latif, maybe you can elaborate.
No, it actually just goes back to to the initial story that I said about when the insurance person got to heaven. He was told he will sit here subject to terms and conditions that will apply. But you have rightly put it. Most importantly, the preamble, what we call reciting clause, you actually define the basis of coverage, what you are covered for. Then, more importantly, the aspect of the terms and condition where the excess will apply, because one of the things that people need to understand is the client need to understand at what point are they to benefit from this policy. What is the threshold of admissibility? Because you will have a claim, yes, the preamble defines the trigger or what is insured that has caused the loss is covered within the policy, but the policy has not met the threshold. So it's very key to help the client understand that this policy can only be triggered if a claim quantification has hit this minimum amount. Because you'll find that for motor vehicle, you get a small scratch, yes, it's an accident. But what is the quantum? Maybe 10,000. Is it admissible within the policy? No, because of the threshold. So it's very important to help the client understand this is a threshold. As you're going into the contract, it's a pooling of risk. It's about sharing of risk. Insurance will not do 100%, but the portion that you will contribute to this pool, which is the excess, is this. So the trigger will only come after the threshold has actually been met.
Okay, interesting. And I think what you had said around, the exclusions is really important from earlier. Making sure that is reviewed, very well. The policy may be fire coverage, but it excludes you burning down your own house. Situations like that. So, I think that's just kind of a funny example that I wanted to bring up. Now, we've been talking now well over an hour. I want to close us out for this discussion today. We've had well over 500 different people join us for today's discussion on terms and conditions and risk advisory. So, Joseph, I want to start with you, then we'll go over to Latif. Any final thoughts or parting advice that we may have not covered already or that you would like to reiterate here now?
Yeah, maybe it's just a question. And basically, that this goes now to the claim, the challenges that people normally get when it comes to claim. And what we have observed is that sometimes people feel like the process are delaying too much, and they end up, say, for example, fixing the problem without sometimes even giving the insurer the opportunity to assess the extent of damage. So I think for me, it's a caution because that can lead to your claim being liquidated. But more importantly, what I would want to underscore is to emphasize the role of risk management. And because when you look at the risk management, you are basically looking at the downside risk. And you're also looking at how you can maximize the profitability in the business and maybe build that economic resilient. So when you're choosing therefore a broker, it is therefore important to make sure that the broker you choose assess and find out whether they have those capability to provide risk management, sometimes even as an in-house service, because that way you'll be able to deliver or to get insurance cover that are relative to the risks that are facing your business, specifically facing your business. Thank you.
Hey, Latif, any parting advice, thoughts for us today?
Yeah, sure. So I think one, thank you for this opportunity. I think it provides a platform where we can educate, share, and also maybe just learn from the questions from which we'll get from the audience, just to pick up what is in their mind when they buy insurance. One, I will just want to reiterate that it doesn't cost you anything to tap into the services of a risk advisor, and that specifically relates to us as Minet. And insurance is one of the key tools that is or well optimized can be used as a business resilient tool. We have seen business where just because there was no existing policy, where livelihood and the generation has actually been lost just by a mere trigger of either fire, and ordinarily could actually be protected. So I'll urge most is if you have an existing policy, if you have an existing insurance portfolio, just ensure that you do regular reviews, and more importantly, ensure that you have sufficient time to renew your policy. The preferable date is about 90 days before the expiry, so that you can be able to question and have much sufficient time just to understand the policy. So on the process, yes, be guided by a professional, but ensure that you actually own the process 100%, because this is your business, and there's a better way that you need it to be transferred and also just to be managed. So welcome to Minet. We'll be happy to assist you and just to guide you through the process, and you can be able to tap into our expertise as we help you secure your business and as we secure your tomorrow. Thank you.
Well, thank you, guys. Now you've encouraged people to reach out to you. What is the best way for them to reach out to you and the team at Minet to take you up on the risk advisory and other insurance opportunities?
So the best way is through our email, info@minet.co.ke. It's manned 24 hours. So even if you share an email now, it will actually be redirected to a competent resource who
You
will be
said
able to
info@minet.co.ke.
minet.co.ke. Feel free to reach out to us or through our numbers 0719 044 then 000. So you can be able to reach out to us directly or through our social platform, LinkedIn, Instagram, TikTok, will be able to be of value to you.
Awesome. Well, Latif, Joseph, thank you guys so much for your time today. We really appreciate it. And thank you so much to everyone who has tuned in here today across Kenyan Wall Street, LinkedIn, YouTube, and X accounts, in addition to our webinar streaming platform. It's always great to have you and see you every Thursday. If you want to keep up on topics of insurance and keeping up with various industries, the stock market and whatnot, you can always read the Kenyan Wall Street for free online without a paywall. You can go to our website at www.kenyanwallstreet.com, and then you can also follow us across any social media channel. Latif, Joseph, thank you again. Thank you to our friends at Minet for helping put this together, and we look forward to seeing you all here soon again. Thank you.
Thank you.
Thank you. Thank you, Andrew. It's a pleasure.